Hold up, before we dive in, let me ask you this. Are the global markets about to snap under the pressure of fear, or are we on the edge of a massive rally? Most people won't see the real answer until it's too late, but you will. In the next few minutes, I'm breaking down the one report that could flip everything on its head. And trust me, you'll want to catch this before the markets react. So smash that like button, share this with someone who needs to know, and make sure you're subscribed. Stay with me until the end, because missing this insight could cost you more than you think.
All right, let's dive right in. The global markets right now, they're basically in a giant tug-of-war. Seriously, on one end of the rope, you've got all this hope for economic easing. But on the other end, you've got this nagging fear of inflation and instability. And that tension, it is creating some major volatility.
So, hope or fear? What's really pulling these markets in opposite directions? You know, you've got this dream of a soft landing, maybe some help from central banks, but then, bam, the reality of stubborn inflation and, yup, new political drama hits. Let's break down exactly where this battle is being fought.
Okay, so first, let's talk about the West. For a long, long time, the US and Europe pretty much walked in lockstep, right? Well, not anymore. Their central banks are on completely different pages now, and that split is really starting to shake things up.
I mean, look at this. It's like a tale of two central banks. Over in the US, the labor market is finally cooling off a bit. You've got Fed Governor Waller actually calling for a rate cut. And the market? Oh, they're all in, pricing in an 89% chance it happens in September. But then you hop over the Atlantic, and the European Central Bank is, well, they're basically paralyzed. Their own meeting minutes show they're totally split. And with inflation just refusing to go away in places like Germany and Spain, it looks like they're just stuck on hold.
But just when you thought the economic path was getting a little clearer for the US, a political bombshell drops. And we're not talking about inflation numbers here. This is a whole other level of crisis, one that throws a huge wrench of uncertainty into the works for investors. So why is this such a big deal? Because firing a Fed governor hits at the very core of the central bank's independence. That idea that the Fed can make decisions without political pressure is supposed to be the bedrock of market stability. Now, with a potential court battle on the horizon, investors aren't just worried about the economy, they're worried about the institution itself. It's a massive wild card. Okay, let's pivot and head over to Asia because the plot thickens over there. We've got another huge split, a real story of two completely different economies. You've got China, where the market is absolutely on fire, and then you have Japan, which is tiptoeing down a very, very different road. I mean, just take a look at these numbers from last week. Europe and the US, down. Japan barely budged. But China, the CSI 300 shot up over 2.5%. That is a huge gap. It really makes you wonder what on earth is fueling that rally. And that's the million-dollar question, isn't it? When a market takes off like a rocket while everyone else is still on the launch pad, you gotta pop the hood and see what's really powering it. Is this built on a solid economic engine, or is it just fumes? Well, here's our first big clue. Margin debt, that's just a fancy way of saying money people borrowed to buy more stocks, is at its highest point since 2015. And when you see that, it's a pretty big red flag that a lot of this rally is being fueled by pure speculation. So when you dig a little deeper, you see the whole thing is actually kind of fragile. The rally isn't running on strong fundamentals like retail sales or factory activity. In fact, that data is pretty weak. Nope. It's running on pure liquidity, a ton of retail excitement, and this is the big one, the hope that the government is about to unleash a massive stimulus package. It's a bet on the future, not a reflection of the present. Now, let's switch gears to Japan, which is, as we said, walking its own tightrope. The Bank of Japan is in a real bind. On one hand, unemployment is the lowest it's been since 2019, which is great. But on the other hand, industrial production is actually shrinking. Talk about mixed signals. So they're inching towards something called policy tightening, basically raising interest rates. That's the exact opposite of what the US is thinking about. And you have to understand, for decades, Japan has been this source of super cheap money for the entire world. If they start to raise rates, that's not just a big deal for them, it's a huge deal for everyone. It could suck a ton of capital back home and completely redraw the map of global investments. Okay, so all of this, the split in the West, the fragile rally in China, the tightrope in Japan, it all sets a stage for a really critical week ahead. We're at what feels like a major inflection point, where the next batch of data could finally decide who wins this global tug-of-war. We're tracking 5 big risks that could really dictate the market's next move.
And here they are. You've got everything from that big US jobs report and the Fed drama to stubborn inflation in Europe, stimulus hopes in China, and even retail pain in the UK. Seriously, any one of these could be the thing that tips the scales. But look, while all 5 of these are on the radar, there is one report that looms larger than all the others. It's the one everyone is holding their breath for. It has the power to either pour gasoline on the market's hopes or douse them with the cold water of its deepest fears. And that, of course, is the U.S. jobs report. Remember, July's number was pretty awful, only 73,000 jobs. So the stakes for this one are sky high. And here's the weird paradox we're in. Another weak number is bad, right? It stokes recession fears, but it could also be the final nudge the Fed needs to actually cut rates, which is what the market is desperately hoping for. So bad news could be good news? This one report really could be the tipping point. So let's take a step back. What does this all mean? We've looked at the splits in the West, the weird situation in Asia. When you put it all together, which way is that rope in the global tug-of-war actually moving? You know, this quote from the weekly recap really nails it. The balance of risks is tilting toward economic softness. So yeah, you've got these bright spots like that crazy rally in China, but they're not based on fundamentals. The underlying trend, the big picture, is that things are weakening. That rope is slowly but surely getting pulled towards a slowdown. And that leaves us with the big final question hanging over everything. The market is just locked in this tense stalemate, caught between hope and fear. Is this week's jobs report going to be the thing that finally breaks the deadlock and maybe even snaps the rope?
If you found this breakdown useful, hit like and share it. It helps more people discover MacroNav. And if you want more clear, no-nonsense explainers on global macro and finance, make sure you're subscribed. Stay ahead, stay informed.